Okay, great. I'm seeing check mark on our YouTube and also a check mark on our Facebook, which means that we're live. Just going to check and be sure. That is true. Okay. I'm sharing this out, and I'll just give it a couple minutes for folks to start tuning in to the broadcast with us. Perfect. I'm starting to see the notifications pop through. People are starting to come on. We're slightly behind schedule. I'll take the blame for that. I had some tech issues today, and most of you that know me know that I am not that tech savvy. So as young as I am, it doesn't mean that I can navigate things, and it took me quite a while to get started this morning. But we're on here, and we are excited to get this kicked off and started. So I'll go ahead and just kind of begin with some housekeeping things before we move into our topic for today. For those of you that are starting to tune in for the very first time, I am Juliette Abdel. I am the president and CEO of the Westminster Chamber of Commerce, and I want to welcome you to our live broadcasts. These can all be found in the video section here on our Facebook page or YouTube channel, for you to rewind, rewatch, and replay if you ever miss any of our updates, whether it's city, membership driven, or resources. We want you to be aware of the information and all of the ways that you can find services that you might need in our community. Now, if you are a first time viewer on our pages, then I want to encourage you to hit the subscribe button on our YouTube channel or hit the like button here on Facebook. Make sure that you are also following the Facebook page so you can get alerted when we go live or when we post content in the future. We're back on Instagram at the Real or Westy Chamber Official. I think that's what we called this second one. We ended up blocking ourselves out, but we're back on Instagram. We're on Twitter at Westy Chamber, and we're also on LinkedIn, Westminster Chamber of Commerce. You can always find more information about what we're doing and ways to get involved on all of our social media platforms. So we encourage you to get involved through that lens as well. Now, along the way throughout this video, you can always comment any thoughts, questions, or just random remarks. We always like to see what those thoughts are and help with any questions and getting them answered and taken care of. When you do comment, because I already have Parker Brown on here with me, and I also see one of my good friends who's in another country, Abdel Sattar. Thank you for hopping on here with us. But Parker has commented a quick good morning message, and this is how the comments will look. Your name will display, the comment will display. We're able to read what it is. If it's a question, we'll address it in a timely manner. If it's a comment, we'll recognize it for you all. And thank you for engaging with us. Now, our Wednesday broadcasts are always incredibly fun for me because I get a chance to have some one-on-one time with our business members that are connected with the chamber. It's an opportunity to see who they are outside of just the company and the brand that they represent. And so for about 30 minutes, they let me pick their brain, or slightly under since I talk so much at the start, but they let me pick their brain. They share some things that we should know. And then they also debunk some myths that may be hindering you from seeking their business service or product that they have. So very excited to have PrimeLending on here with me today. And Jason, thank you so much for being on here.
Yeah, thank you. Hi, everyone. I appreciate the opportunity to talk to you.
Of course. Well, tell me a little bit about who you are outside of your company. Are you from Colorado? Are you, a transplant? What were you doing before this?
Well, I am a Colorado native. Actually grew up in Westminster. So I have not moved far. I'm in Thornton now.
Okay.
But yeah, I grew up in Westminster. And actually I just found out this year that I think I'm a third or fourth generation native. So
Wow.
yeah, so I thought that was pretty cool. I have two girls. I am married to my best friend that I met in third grade.
Oh my gosh.
Yeah, her and I have been in the same class since third grade. So we've known each other for a while. I like to, I think my favorite thing about Colorado is just how many days of sunshine we get, and how often we can be outside. I'm working on my patio, so
Good.
I get to spend a whole bunch of time outside. I like snowboarding and hiking and softball, golf, anything where I can be outside. And then a little bit about kind of my background. I've been in the financial industry for about 10 years. Went to school at Metro State and graduated from there in a totally separate field. Not at all related. Graduated with adult fitness and exercise. And so I kind of moved into the financial world about 10 years ago. And yeah, that's a little bit about me.
Yeah, well, I always say that Coloradans originally are rare and all of that good stuff, but I have met so many in the last week, even alone, that I'm like, I feel like it's the pendulum is swinging, or I'm just like getting involved in so many things that most of the people I'm running into are like third and fourth and fifth generations. I'm like, oh my gosh, you guys have been around for a while. And I'm
Yeah.
sure that story with you and your wife is one that I would love to hear at a future point, because knowing someone from third grade is quite a long period of time. And then transitioning into the relationship that you all now maintain and the family that you've created, I'm sure is a story in and of itself.
Yeah, I'm sure it is. Yeah, I enjoy telling it.
So sports and exercise and physical wellness, it sounds like kind of were your interest areas, but you moved into finance and now most recently with PrimeLending. So are you an independent agent with PrimeLending? Is this a business that's yours? Can you tell people a little bit more about your company?
Yeah, it's a great question. So PrimeLending is a Plains Capital company, and so they are. The best way that I can explain this is we're like the marriage of a broker and a bank. So we have 450 different products that we have access to. Some of them are bank products, some of them are broker products. And so we're in this unique position where we can help a lot of different scenarios that like a traditional brick and mortar bank could not. And
I know that we've had some technical difficulties, and as Jason is coming back to us, you can always, like I said, comment or ask any questions that you might have. Yeah, between him and I's internet connection today, we are making it a little bit of a challenge. Welcome back,
I'm
Jason.
back. All right. Yeah, so we have a lot of different things that we can help with. So I am not an independent contractor or independent owner of a brokerage. I'm an employee for PrimeLending, which is a Plains Capital bank.
Okay.
Or
Good.
Plains Capital company, yeah.
Plains Capital Company. And I see Brian Head on here, one of our past board chairmen, giving us a quick good morning message. Thank you for tuning in with us.
Good morning.
Yeah. So Jason, what are some of the services that you guys offer?
So really, I like to just offer advice. We have, like I said, we have 450 different products. I kind of pride myself on not being someone that is just going to, give you the best deal or the best rate or the best fill in the blank. Like ultimately that's my goal. But I want to be someone that you can trust to answer honestly questions about the mortgage process and what's involved. And it's a stressful, it can be a very scary thing for a first-time home buyer. It can be a very scary thing for a not first-time home buyer. And there's a lot of advice out there that doesn't really make a lot of sense, in my opinion. So I try to strive to give people the best advice based on their situation.
And what would you say makes you kind of stand out in your industry, maybe?
Well, I don't just see my clients as just another transaction. I see them as the potential to build a relationship, to build a friendship, to build a connection that lasts past buying your house, and making sure that I'm available and I can be there for questions after you've bought the house, because there's a lot of things that come up after the fact that you don't necessarily have anyone to turn to.
Yeah. So how long have you been in mortgage?
So on the mortgage side, it's coming up on 2 years. Before that, it was about 8 years on the management side of banking. And so I was a branch manager, managed a team of bankers. So a lot of the things that I bring into my conversations come from also the bank side. So looking at your entire financial picture as one big scenario rather than just the snippet of mortgage is kind of what I like to do with my clients.
Absolutely. Well, for those of you that are starting to hop on with us, this is our network welcome for PrimeLending. You can always ask us any questions that you might have or comment thoughts along the way. This is really a rapid fire interview that I have between myself and the guests. I don't ever tell them that, so I don't scare them off ahead of time. And I tell them that it is more to get to know them. And we've learned a little bit more about Jason personally, and how he wound up in the mortgage industry, of course, coming from the banking or the finance world. And so now I really want to transition into some of those myths that we might hear, Jason, around getting a mortgage or working with a mortgage officer. If that is okay by you, these are just thoughts that are out there that people might have that make them more hesitant in working with someone in your line of work, or maybe scares them off to begin with. So I know you haven't seen any of these questions. They're just, again, they're going to
fire away.
Yeah, I'll just fire them away and I'll see what your thoughts are. So the first one is that you shouldn't buy a home when interest rates are rising. Is that a myth or is that true?
That is a great question considering where we're at in the market today. Yeah. So I'm going to say this is a blanket statement. It depends on everyone's individual situation. With that being said, buying a house right now, you have more negotiating power than you have in the last several years as a buyer. One of the terms that's kind of thrown around in the mortgage world is marry the house and date the rate. So the rate we can take care of the rate and get you into that house that is the house of your dreams right now, because home values are still expected to go up. And so one of the tools that I like to provide is what's called a cost of waiting analysis. And in most cases, waiting a year can cost you anywhere from $15,000 upwards of $45,000 in a combination of equity and paying off your principal balance in that 12 months, even at a high rate. That's staying with the same rate over the next 3 years. Yeah. And so that number continues to go up. So in a short answer, yes, now is a great time to buy a house. Don't let the rate scare you away.
Yeah, and I think you actually hit it on the head with that. Is you know, you started by sharing, kind of know where you're at personally, because that does affect your decision on whether or not you should look into home buying and everything. But even though it has increased in the over the last couple of years and what it's looked like, it doesn't mean that it's not a good environment or time to be looking at a home buying, if that is what you're interested in doing. So here's another one for us. And this one is that you need excellent credits to qualify for a mortgage.
That is a myth. You do not need excellent credit. There are products out there that can get people from a 620, even in some cases below a 620 FICO score.
Mm-hmm.
There's a lot that goes into looking at building the structure of your application outside of credit score. There's the income, there's how much assets you have available, and then there's the credit side of it. So there's those three big pillars, credit being one of those. You do have to have good credit, but you don't have to have excellent credit. And I think everyone's definition of what is excellent credit is very different from person to person, right? So you know, what you'll find is we can still get you into a house with a below 650 credit score.
And do you think this next question is kind of a follow-up to that, because it talks about some of the things that might be on someone's credit as it relates to student loans? So this is more along the lines, if you have a student loan, you can't qualify for a mortgage. Would you say that the same answer that we just gave on there are numerous factors that affect your scoring, and it's not only that, it applies to this as well?
Yeah, that's a really good question. So student loans are they are included in qualifying. And so they're not necessarily going to be included on the credit side or the credit score side of your qualification. It's more going to be on the debt to income side. And so I like to give an example for this. Typically, there's two different types of products for a conventional mortgage. There's Freddie Mae. There's Fannie Mae and Freddie Mac. Those are kind of the two big investors that support conventional mortgages. One of them will allow you to calculate your student loans at a 1% balance. The other one will allow you to calculate them at 0.5% balance. And so what that means is if you owe $10,000 and it's reporting to your credit report that you have a 0 monthly payment, we still have to factor in a monthly payment for that. And so we would either factor that in at 1% of $10,000 or $1,000 versus $500 as a monthly payment. And so depending on the route that we go and the product that we choose, we can absolutely structure that so that it fits within your debt to income.
Yeah, that makes
Hopefully
sense.
that helps answer that question.
No, it does. It does. And I appreciate the clarification, right? Like, it won't pull on your credit, but it's still a qualifier for the things that we're looking at. And here are some of the ways that we can look at that or tackle it. I see our board chairman, Brian Dice, on here with us. Thanks, Brian, for hopping on. I also see that you have a question for us that I will get to here in 1 second, because I've already started throwing in more myth things I want to ask Jason. So this next one is talking about down payments and how you need to at least have 20% or higher to be able to home buy.
This one is a myth. This one is a common myth. A lot of people think they need to have a lot of money saved up to buy a house, and that's just not the case anymore. There's several products where you can have as little as 3.5% down. There's actually a couple products out there where you don't need any money down. Those situations where it's no money down can be specific to counties and specific to areas. Using what's called a USDA loan. USDA loan can be 100% loan to value. And what that means is that you do not need any money down. The kicker to that is it has to fit within a box. I like to use the analogy of a box. It has to fit within a box, and it has to be in a certain area that's designated for rural zoning.
Okay.
And so there are instances where you can have no money down to buy a house. And then there are instances where you can have as little as 3.5% down. Also, we have some really good programs in Colorado for down payment assistance through CHFA, or CHAFA is what you'll hear that called, and CHAC, CHAC. There's also some smaller companies that have some grants and things out there to help with down payment assistance that we can partner with.
Absolutely. So this next myth is about adjustable rate mortgages. And it says you should never get an adjustable rate mortgage. For those people that don't know what an ARM is, if you wanted to start with that first and then explain if this is a myth or not.
Absolutely. So you're asking the questions I was hoping you were going to ask. So yeah, well done. So the adjustable rate mortgage, what that is it's a mortgage that your rate adjusts after certain fixed time periods. So you'll hear a 7-1 ARM or a 10-1 ARM or a 10-6 ARM or 7-6 ARM. What that means is that first number is how long your number is, or how long your rate is fixed for. So we'll use a 5-1 ARM for an example. Your rate is fixed for 5 years. After that 5 years, it turns into an adjustable rate, and it will either go up, down, or stay the same based on where the most of those use what's called an SOFR, or SOFR index, that determines what that rate is going to be. So if the SOFR index goes up or down, your rate will adjust accordingly. All of that is built in for how much it can adjust in the first year, the maximum that it can adjust. So in a high rate environment, or I guess I shouldn't say high rate in relative to the last 40 years, we're in a normal rate environment that's just going up and down daily. That's where it's a little bit abnormal, but I sidetrack. So with the adjustable rate, now is a great time for an adjustable rate. If you would have asked me this question, beginning of last year or even in the end of 2020, it probably wasn't a good idea to do a fixed rate or an adjustable rate, because fixed rates were so beneficial and so low at that time. Now, an adjustable rate is a tool that you can use to get into a house. And after we start to see rates maybe dip back down again, at that point you can refinance into more of a fixed rate.
Oh, interesting. Yeah. So it is dependent on the climate or the environment, it sounds like.
It is. Yeah. And getting way into the weeds, I won't go too far here, but getting way into the weeds, they used to cost banks the same amount when we'd buy loans or we'd buy money to lend out. It would cost the same for a fixed rate as it would for an adjustable rate. So it made no sense to provide an adjustable rate over a fixed rate over the last couple of years. Right. Whereas now that has switched. And so that has shifted a little bit and made those adjustable rate mortgages much more favorable.
Totally. Thank you for explaining that for viewers, for myself, and going in detail on that myth. I shared this earlier in that our current board chairman, Brian Dice, was on the broadcast with us. Brian had thrown us a question kind of in the middle as we were talking about myths and everything. But this is outside of myths. This is just a general question that's out there. So I'll read you the question, Jason, and allow for you a chance to answer this question back to our viewer. Brian's asking what your advice would be to someone who won't be ready to buy a home for another 6 months. If there is any action that they can be taking now ahead of time.
Yes, that's a great question. I love when I hear people planning ahead. A lot of times I will have conversations where they are not planning ahead. And there's some challenges that can be thrown into that. So yes, there are some action items that you can take if you're not ready to buy for 6 months. A couple of the big things is I would recommend getting a copy of your credit report sooner rather than later, so that you can see exactly what's reporting to that credit report. it's important to address any of those maybe unknown or negative items that could be reporting to your credit report now, rather than them being a surprise when you start the mortgage process. Mm-hmm. That would be my number one piece of advice. Number two, try not to take out any additional credit or any additional loans in that time frame. That's just going to add to the one side of the equation on your debt to income. The more debt that you have, that takes away from the purchase price that you could qualify for. And then the last piece of that is you know, I know we talked about having a smaller down payment. You can have a smaller down payment, but it is always beneficial from a rate standpoint and a mortgage insurance standpoint to have a higher down payment. So the third piece of advice would be to save as much as you can in the next 6 months. And yeah, I'd say the first thing I'd focus on, though, is going back to that credit score. Get a copy of your credit report. Have a game plan for anything on there that's reporting negatively. If there's nothing reporting on there negatively, put away as much money as you can for 6 months.
Yeah. That's thank you for that question, Brian. I hope that Jason's answered it thoroughly. He's answered it in a 3-part answer, really, but given us a nice starting point for those viewers that may be interested in potentially buying into the future and are wondering what they can do right now. Jason, I've been peppering you with random questions that I've thought of. I've also been peppering you with questions about you personally and your company. Was there anything that I did not get a chance to ask you that you were hoping to get across to viewers or listeners today?
I don't think so. The notes that I had, you pretty much hit them all on those questions.
Awesome. Well, if you don't have anything, then I want to reference a couple of things for them. For those of you that are interested in connecting with Jason or learning more about him directly, this is the link to the PrimeLending page about him particularly, and ways that you can reach him, and his credentials in the industry, etc. I also wanted to share with you Jason's phone number, and that's a 303 number. Is that still accurate, Jason?
It is, yep.
303-868-1508. Is what I have. For you all that are interested in connecting with Jason, you can, of course, call him at any point in time. His email address, if you're interested, is also, all of these have been dropped into the chat. So you guys can find them. I know I'm flashing them very quickly, but you can find them at a later point to be able to connect with him. His email is jason.lancy@primelending.com. I know I probably butchered his last name, but it'll get to him if you type in the details as they're written in the comment section. Before I completely close out, very excited. This Friday is our Chamber Awards Gala, where we're honoring so many businesses, small, large, national, excellence in business. I mean, this is always a fun opportunity. We've got great partners like Uplands and Marriott that are allowing us to host and be our presenting, and then some amazing VIP sponsors along the way, like Red Rocks Community College, Chapman Premier Members Credit Union, Adams County. I'm forgetting some people. We've got, awesome floral company that's also helping us tie everything in to make it an exciting evening as well. You can find information about the event online. Although it is completely sold out, we're actually oversold on it. So you'll have to stay tuned for photos to see who won, and to relish in those photos afterward, and know that next year you should pre-register ahead of time so you're not caught in between trying to get a ticket when there is not one available. But that is our event on Friday. I've had a terrific time getting to meet Jason with us today and learning more about him and PrimeLending and all things mortgage, and helping educate you all on things that you can do proactively. I want to thank all of you that have taken the time to tune into this, whether it's morning, afternoon, or evening. This is available at your convenience to rewind, watch, pause. If you have questions you didn't get a chance to ask Jason that you were hoping that you could, or maybe like a personal thing that you wanted to share with him, my credit score is this, or I know I have that, or here's a concern that I have, whatever those questions might be, you can always either email him, call him, or DM the page, and we're happy to get that over as kind of a general statement and see if he can't give us a response back to you all. But I want to thank you, Jason, for being on here with me.
Absolutely. Thank you again for giving me some time to talk.
Of course, and I can't wait to continue to get you plugged in into the community out there, and for people to learn more about you and get to know you personally outside of all of these amazing expert advice that you've given them today.